The biggest years in the last Trump presidency were 2017 and then 2020. And so I do think there will be kind of an ebb and flow over his presidency. But I think people who are overfitting the 2021 fractal to what might be 2025 probably end up selling too early.
Hey everyone, this episode is brought to you by Uniswap Labs, who is launching the largest bug bounty program in the entire history of crypto. It's a $15.5 million program which follows 8 independent audits of the Uniswap v4 protocol. This is aiming to be the most rigorously reviewed code base ever deployed to Ethereum. So if you want more eligibility on the scope, rewards, payouts, etc., just click the link in the bottom of the show notes, tell them that I sent you. You'll be hearing all about Uniswap Labs later in the program. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2 and Vance, all three of us here this week. And this is going to be a really fun episode because we're getting into 2025 predictions. But before we do that, I wanted to give a quick shout out to this episode's sponsor, Aave. Aave is one of the longest standing, most trusted, most secure protocols in all of DeFi. We've got over $20 billion worth of TVL. So head over there and you can supply, borrow, swap, stake, do whatever you want. And thanks a lot, Aave. All right, guys. Before we get into it here, how's everyone doing?
Doing well. The three amigos are back. Although we did pretty well last week, just the two of us, Mike.
We did. Yeah, I think we held it down.
You two should do your own pod, and I'll just do a solo hour.
Yeah.
Like a Tim Billions.
This thing on. The variety show.
Lagging around, all these like the mic hitting the table every other second. This is gonna be a good one. We're doing the 2025 predictions, and we talked about doing a review of 2024, and I think we're gonna largely skip over that. We'll link in the show notes here the 2024 predictions episode that we did, but we got a lot of thoughts on 2025 in general, and feel like it would just be better mostly to go into 2025
I think the review of 24 is frankly just that the election ended up way more bullish than anybody expected. That overrides everything, and it's leading us into a great 2025.
Who's Mark in the chat, by the way?
Mark is our producer for the show. No, he's just some guy on CT who's a big fan, and we invited him on here.
He broke into the private chat. Nobody knows how.
Nobody knows how.
We should keep this in. Mark, appreciate you, buddy. All right, so maybe let's do a quick. I'd actually love to get, before we get into some of the more specific predictions. So we sort of broke it out. There were some more sort of macro and market predictions, which we're just going to spend a tiny bit of time on, just to give you guys a sense of where we think the macro is going into this coming year, and spend most of the time on a very specific set of crypto predictions. But so I went back and just to summarize 2024, or what we were saying for our 2024 predictions, I think we got it largely right. You guys were both actually extremely bullish in terms of just where we thought markets were going this year. And I think that, something that we've talked about offline a little bit is that this feels very much like a 2020 sort of timeframe here, especially as we've gotten towards the end of the year. And so I guess maybe just any commentary on, how things have played out this year, anything that was maybe different or similar to what you were expecting. And then, the follow-on question to, if this is 2020 or December of 2020, are we going into a 2021 like year?
I think the main thing that is surprising, but is kind of always the case at the same time, is just how liquidity sloshes around and how narratives rotate, and how, on any given year, you probably have the opportunity to get like one new coin to like a 50 to 100 billion valuation. And that was obviously Solana in 2024. And I think if we even tried to collectively think back on the year, we probably couldn't name all of the narratives that happened. Like, what was the narrative in Q1? I guess it was the Bitcoin ETF.
Yeah.
And then, I guess that was like, oh my God, and then it was like, is the ETH ETF going to get approved? Yes or no? We said yes. Obviously the market said no, and then it got approved. Then it was kind of like the death of ETH for probably Q3. And now
Q3 was outflows of ETH ETF of ETH.
Right. And I think that's like, what were the outflows? 8 or 9 billion from ETH?
No, 3.5.
3.5. I mean, like 3.5, maybe call it 4, just to be generous, of ETH outflows. And it wasn't what caused the entire retracement from 4K back to kind of like 2100, but it was certainly a driving factor. And I think it just serves to remind you that like unlocks are real. And, certain projects are going to have those. Solana, these other L1s, like these other kind of BC coins, whatever you want to call it. But just it's been a year of being reminded that price drives narrative, drives adoption, drives liquidity, drives price.
Mm. Yeah.
Yep.
Agree with that. Agree. So, what are your thoughts? Kind of maybe we can and Vance will link this in the show notes. And even though this went out under your Twitter, I hear this is both of your thoughts a little bit, Michael, this year.
We can call it combined thoughts, but I didn't see Michael writing last night.
Yeah.
All right, so there's a little bit of a question about where these predictions are truly coming from here, the provenance. But here, I'm going to share my screen, and we can focus maybe just a little bit on the macro predictions or some of the US centric predictions before we get into the more crypto specific ones. So here, I'm just going to pull up my. All right, can you guys see that? I'm going to zoom in a little bit. Oh, man. All right. Okay, I can't really zoom in much more than this, but hopefully we can do something post production here. But I'm just gonna I'm gonna start with this US one here. SPX to 7,500 AI delivers on its promises. So, what are your guys' thoughts just in general about where we end from a broader market standpoint next year? And I'll throw in, by the way, as well, that inflation you're predicting at 2.5 to 3.3%, and that the Fed will cut rates significantly in response to a slowing job market. So, where do you think we end in general in terms of like the macro here?
Well, so I think maybe one of the fair comparisons is where we were in relative time to 2020. So December 2020, what was going on? We were at the peak of COVID. We were at the peak of trying to buy our way out of, what was expected to be, this global pandemic that was going to last years. We had not really any line of sight to potential vaccine, or there was hope, but it was a question as to whether or not it was going to be months or years away. And so this is kind of like peak bearish time. And then what happened in 2020 was 2021 was the liquidity unlock really happened. I think that where this dovetails in, the differences here obviously is we're not going to see the same level of liquidity that we saw in 2020, end of 2020 and 2021 equivalent. This is back when Chamath was doing IPO A through IPO Z SPAC. You've got everything. GameStop obviously was kind of the start of this, but everything just went absolutely nuts. I don't think that we're going to have the same effect globally, but I do think that there's going to be a market rotation, and this is where I think the AI element actually does come into play. You've got 120 million people using ChatGPT every single day. My guess is that probably triples next year, probably closer to 500 million daily active users. And they're going to be paying for it. They're going to be using it. I would also be willing to bet that OpenAI starts to really seriously consider an IPO. If they don't, do one in 2025, it'll be on the docket for 2026. That same level of liquidity and attention and market action is going to come from AI, and it's not going to come from every single corner of the earth as it did in 2021. But I do think that we're going to start to see like the AI boom really kind of crest or start to approach a crest in 2025 on the heels of OpenAI just absolutely crushing it.
Yeah, I think the other stuff is, you're going to see a wave of tech IPOs that are going to lift the market. Maybe Stripe, maybe SpaceX, maybe, there's a couple of crypto ones, OpenAI, maybe things like Anduril. Like people want to buy these IPOs, and I think it's going to be a generally bullish market as a result. 7,500 is 25% from here, give or take, and that's at the high end of most analyst expectations for where the stock market is next year. But I think basically what I'm trying to communicate is at least just it's going to be a very bullish backdrop for crypto and risk assets, and a lot of the current crypto assets or equities are probably priced to perfection, like Nvidia or any of the big SaaS companies. But all these new IPOs are definitely going to be the thing that fuels the market in that same Chamath SPAC-like context, but much less scammy and frankly much better businesses. So yeah, I think it's a very bullish start to the Trump presidency. The biggest years in the last Trump presidency were 2017 and then 2020. And so I do think there will be kind of an ebb and flow over his presidency. But I think people who are overfitting the 2021 fractal to what might be 2025 probably end up selling too early, is my guess.
Mm.
The other angle that I would say too is because it will be so dominated by specific categories that are outperforming. I mean, once again, what happened in 2021 was if you bought any asset, it went up. Was basically the effect of the liquidity rising tide floats all boats. And I do think that you're going to start to see that in a lot of cases, and you're going to see Bitcoin outperform. You're going to see all these AI companies outperform, but it's not going to be I can go and buy some profitable SaaS company that's doing nothing interesting, but just because of the fact that it's in the NASDAQ, it goes up 2x. I don't think you're going to see that same effect. And what that means is we're going to leave 2025 with a perspective of here are the industries that are doing well, and here are the industries that are doing fine, but not doing as well as the others. And it's not going to be this question leaving 2021, was that a fever dream? Was that a liquidity fever dream? It's going to be, separating wheat from chaff in terms of which ones are doing well. Crypto and AI are going to be those two, and everything else is going to be kind of sidelined in terms of growth.
Mm. All right, so I've got some more. You've got a couple of Trump-specific predictions here. I'll just list through. So Trump hits the highest approval rating of any president. Trump will set a new monetary global framework similar to the Plaza Accord in 1985, where the dollar is significantly weakened gradually, and this might bring some manufacturing and liquidity back to the U.S. and crypto risk markets. And then also that Doge is wildly effective. This is less about Trump specifically, but you think that they could cut 2 to 3 trillion from the federal budget. So whichever one of those you want to take, maybe just what were maybe some of those Trump. What makes you so bullish on the Trump presidency in general, and then maybe we could talk a little bit about Doge, frankly, and what you're seeing there in terms of just cutting dollars out of the budget.
I think overall, I mean, America is very susceptible to a psychological boost right now. That's at least my feeling, where America is usually at its best when it's like a little bit swaggering and a little bit, just like cocky. And I think like Joe Biden and Kamala Harris were basically like the antithesis of that, and Trump is the embodiment of it. And so, just from a psychological perspective, feels like we'll have wind in our sails. And I think the things to consider are basically like if you look at the 10-year, which is one of the main things that we look at in terms of what's the cost of capital, it's just been marching higher despite them cutting rates, which is effectively showing that there's way too much debt and way too much spending in the US itself. And I think people have been fading Doge in terms of, there's just too much bureaucratic, process and red tape to really make any meaningful change into the US. But, last night seeing Elon kill a bill on Twitter was just like wild. He's just like, we're not doing it. And if you're doing it, if you're voting for it, we're going to primary you. And I expect that to basically be the modus operandi for at least, the first 2 years. But these programs are going to be successful, in my view, to the extent that he drops the deficit to near zero. Then you see a big kind of flush out of interest rates as they go down and as the Fed lowers them, and then that kind of kicks off probably that back half of the Trump presidency, golden bull run, where I think people think like local top Q1, maybe more global top Q4 of 2025, but I think it's kind of all leading into 2027 is kind of my view.
Yep. Only things I'd add are, a lot of the stuff has changed yesterday with the dot plot that we got, where everyone expected that there'd be 4 to 5 cuts next year. Now they're predicting 2. I actually think 4 to 5 is probably more in line. And listening to the Fed guy on forward guidance, same perspective, which is inflation's coming down. I think this is peak hawkish for the Fed, but what I think people are also undervaluing is kind of what Vance just touched on, which is if you cut the deficit to zero, what will naturally happen is that interest rates will come down in the market on their own. They won't be Fed funds guided down. The 10-year will drop just because the deficit is dropping in and of itself, which will be, that's the factor that underpins mortgages. That's the factor that underpins car loans. That's the factor that underpins basically all the consumer borrowing. And so that's where you have the pure effect on the consumer. And I think we're undervaluing what the potential of Doge could do from just a general sentiment and U.S. economic perspective, in the fact that it'll drop interest rates the closer we get it to zero, and then potentially even a surplus as well.
All right. Any other predictions on like the more macro or global market sort of perspective before we get into the crypto stuff?
No, I think generally, an end to wars as well will be nice. Just, I feel like just like that's another psychological thing where people are like constantly just like, okay, what side are you on for Ukraine, Russia? What side are you on for Israel, Palestine? What side are you on for, whatever conflicts we're involved in globally? Just removing that stuff from the daily discourse will take the temperature down a lot. And I think just like a bullish era of peace and safety is probably what comes next.
Just as Vance and I were talking about this yesterday, but in October of 2021, Vance and I actually dressed up as inflation for Halloween. Um, and it was pretty funny.
How
But
does one dress up as inflation? Out of curiosity, what does that look like?
we had balloons that said inflation on it.
And like gold
Okay.
chains and like ridiculous like market dress.
It was pretty good.
Yeah.
But what, just to further this point, inflation was kind of like rumored to be starting in the second half of 2021. It carried through all the way into the first half of 2021, but the catalyst that actually drove inflation higher, or the market to assume that inflation was going to go higher, which furthered inflation all the way to the point of 9% in June, was the Ukraine-Russia conflict. The war that started in January, because that was an exogenous shock to gas. It was an exogenous shock to global peace, and I think that kind of froze things in ways that catalyzed a lot of the inflation expectations and concerns, in a way that if we were to remove those types of exogenous shocks, whether it's directly solving the Ukraine situation or what's going on in the Middle East, those types of effects I think are also extremely undervalued in terms of what they will do to markets and what they will do to confidence. So it's interesting to think back on the timeline as to what were the things that caused those issues, but removing them I think will also be things that solve them.
Yeah, I'm broadly in agreement. I still think 2025 is going to be an extremely bullish year for markets. So less specific predictions than you guys, but I got a bunch of stuff on the crypto side. What's up,
I
Vance?
mean, maybe a question for you is just like, how do you think people are thinking about 2025, just from a very macro perspective? Are they like, I mean, 2023 was just like, the shit is dead. Nobody's
Yeah,
bullish. 2024 was like, I guess, kind of a continuation of that mindset, where it was like that
yeah.
was the rebound year. Get ready to get pile driven into the sand. And then I think this year is like kind of like politically framed, where if you're a Trump believer, you're bullish, but if you're not, you're just like, this is not going to work, and it's not going to be pretty. I mean, like, is that kind of footing with how you see it?
Yeah, I think so. I think that there's an expect. I think a lot of people are have the 4 year cycle sort of fractals playing out in their head right now, that they're maybe overfitting a little bit too much too. And so, when I've like spoken to a lot of, especially fund managers and stuff like that, they're generally, I think, thinking Bitcoin tops out at 125 to 150 this cycle, and it's like March or May timeframe.
We just
Well,
had
we're like 107 like 2 days ago.
Yeah, that's, I mean, I don't know. It'd be like, that's generally the sort of sentiment I get. And I think I think the risk here is that actually people are too, I agree with you guys. I think the risk is that people are too bearish or sell too early, like too early in the year, and then actually might have to buy back or something like that. But I generally sort of get the sense that there's still a little bit of PTSD, which to me says that this is going to go longer than people think, because no one's ever no one's worried or skittish about the top when it's actually the top. You get these really outlandish predictions, and really smart people actually like I will sell when Larry Fink goes on CNBC and calls it a super cycle and calls for 750k Bitcoin. Like, that's your top signal. But people saying, oh, I think it's going to top at 150k Bitcoin is just not it.
Look, let
You
them
didn't come this far, just to come this far.
let those people top out there. It will continue
Yeah.
after them.
We will
Yeah.
still be holding.
Yeah. And I do think that there's a tendency during these prediction episodes, especially, people tend to just extrapolate trends linearly. And usually the reason people get these predictions wrong is because you're doing that whether or not you know it. And so I don't know. I think the point of these predictions episodes is just try to think, okay, what if some of these trends reversed? What would the world look like? Which is a lot of what my predictions look like for.
Like when a company takes their 1 day revenue, extrapolates it over 365 days and calls it ARR.
The annualizor. Yeah, that's we could put a stake in that in 2025, hopefully. But all right, so I want to get your guys here. I'm going to start with the first of your crypto specific predictions here, which is crypto and Bitcoin ETF inflows reach run rate parity driven by the launch of combined ETFs, averaging $1 billion of inflows per day each by H2. So so basically the idea there is that not historically we're going to get a match in terms of AUM maybe managed by these ETFs, but the run rate of new flows coming in is going to be the same for each, and it's going to be $1 billion a day by H2 this year.
What one added point, I think I share the same sentiment, but one of the reason why I view this as happening is I think in H1 you're going to get staking allowed by the ETH ETFs, which drives an entire new cohort of buyers who are looking for yield, but are also looking for asset denominated yield, which is a unique concept in and of itself. Historically, when you have a yield bearing ETF, it's cash flows and cash dividends or cash assets accumulated. But when you have the underlying as something that is accumulating in that fund, it provides amplification that is a unique construct. And even Microsoft alluded to this in their board notes, where they said, while we aren't necessarily considering Bitcoin right now, it would not preclude us from potentially adding yield-bearing assets in the future. And Matt Siegel from Van commented, that sounds a lot like an ETH staking ETF. I would imagine staking happens in pretty soon after the new SEC takes over. It's just an upgrade to the existing staking or to the existing ETF constructs, but that's the catalyst that drives $1 billion a day into the ETH ETFs in H2.
I also think just like the sales motion of these things change in terms of people being like, do you want Bitcoin or ETH? I don't think people really have a view on that, especially people who are not crypto native. I think they're just gonna be like, give me the index, whatever the index is. Oh, half it's yield bearing, that's great too, give me that. So I think that basically becomes, every night I check like, okay, what were the inflows for Farside? Farside is like a data provider. Farside, okay, how much is in the ETF? All right, how much is in the Bitcoin ETF? I think you're just gonna be looking at like, okay, what was in the combined 50-50 ETF? That feels like what they'll be selling.
Yeah. And maybe an early harbinger of that is the Coinbase 50. I don't know if you saw that index product launch from them. I have no opinions on whether or not that's going to be successful or not, but I thought it was a cool idea and roughly the direction that things are going to go in the future. I had some Ethereum specific predictions also. The big thing that everyone's been talking about is this like North Star debate, and I think that's going to be a relic of 2024, and by the end of 2025, people are just going to be done discussing that. Yeah, and I largely think, by the way, like the two ways of framing it have been like roll-up centric roadmap or move a bunch of activity down to L1. I think that there are going to be some small steps to increase the throughput of the L1 and maybe keep some activity, but I think largely the roll-up centric roadmap is going to be reaffirmed, and you're going to get a whole bunch of new, honestly, probably like banks and fintechs that launch L2s this cycle, if I had to guess. Yeah. The other thing too that I think is going to be interesting this cycle, I have a prediction around TikTok on this, but I think that historically the narratives have been manufactured exclusively on crypto Twitter for the most part. And I think that's going to change a little bit this cycle. And I think if you want a good understanding of how ETH is going to get framed, you should listen to like Matt Hogan and the guys from Van talk about it, because that's ultimately the narrative that's going to matter. And so we can kind of, debate about it internally, but I sort of think our, as crypto natives, input is going to matter a little bit less and less. And if you sort of want an idea of how Bitcoin or ETH or any of these other assets are going to get framed, I think you should listen to the institutional conduits. And yeah, shout out Matt Van Eck.
One of my cultural picks, which is kind of the same thing, was the majors, in particular ETH, are going to move from a build mode to a distribution mode.
Mm.
And what I mean by that is it's going to be less debate. And I mean, it's still going to happen, especially in Telegram and Twitter, but the vast majority of the conversation is going to get brought to an institutional audience through the sales motion of the BlackRocks or the Bitwises of the world. And that's exactly to your point. What's the narrative that they're hitting on? Because that's what's most receptive to the RIAs that are listening to it.
Mm.
Yep. I think your point about Matt Wogan and those people being more important than CT definitely resonates. I think this is the first cycle where we're actually transitioning to a net new, base of buyers for these assets. So like, doesn't really matter what CT thinks about ETH or Bitcoin. It just matters what the ETFs do.
Mhm.
So I think that is kind of a huge change. But I do think the CT echo chamber continues to be very powerful, but probably only
Definitely.
only in a manner of like one at a time and hard to sustain more than 6 month narrative. Um, so yeah, it'll be interesting to see. But really, it's all about these ETFs, and I don't think any new ETFs outside of the combined Bitcoin ETH ETF gets launched next year. Um, and I think even like a lot of the ETF issuers are biased to say like, yeah, well, I filed for the XRP, ETF, but it's like, look, like if Valkyrie Holdings launches their, XRP ETF and gets zero inflows, like that's actually deeply bearish for the XRP asset because it's like that's the mountaintop, and once you climb it, you can't go back. And if BlackRock and Fidelity don't support it, and I would probably actually throw in Bitwise because they do a great job as well. It doesn't really matter if there's a new ETF.
Mm.
I think many people will be either disappointed by not having an ETF in 2025 or actually getting one and being disappointed at the inflows that come.
Mm. I've got one more prediction on the or just the E thing, and this would be so. Actually, last year, one of the 2024 predictions. I've never liked the ultrasound money narrative, and I do feel like that was a claim victory on it. I think that narrative is largely dead, and there's going to be a new one that gets reformed. And the debate has been around kind of like roll-up centric roadmap versus world computer. I've always liked the world computer narrative. It actually is what pilled me. When I talked to my dad about this years ago, it like really locked with him very quickly. But I don't think either one of those are actually going to be the mainstream narrative for ETH. I think it's just basically going to be Bitcoin with yield is what people are going to understand. And yeah, I've been a big like the yield on top of the L1 is powerful. When these L1s reach maturity and they're just like this deep, very liquid sort of asset with a yield on top, that's just a really powerful thing. And yeah, I think that's going to be the thing that moves the needle with TradFi. And I think you're going to start to hear a lot of TradFi conduits describe ETH in that way. That would be my prediction. And if we actually get our ETH staking ETF, yeah, it's going to be extremely bullish
I'd
this year.
actually so like I actually like both the world computer and ultrasound money. Maybe ultrasound money
Mm.
is a bit too cheesy, but
Yeah.
Bitcoin is what a 1.5 trillion asset, and it has 2% inflation per year. Give or take maybe 10 or 20 basis points, and kind of succumbing to economic gravity. I feel like that is going to be kind of how this like ultrasound money narrative is framed, where it's like some of these chains are deeply unprofitable, and there's just massive amounts of inflation, which like I think frankly they kind of correlate. They being TradFi correlate to like you know employee stock option programs just being overzealous at places like the Mag 7. So I think there's going to be a focus on blockchain profitability, which kind of backs into like this ultrasound money narrative. We probably need a new terminology for that, but
Yeah, that one's
ETH is ultrasound at probably 20 Quay in terms of there's zero inflation. I would also expect to see inflation on ETH and probably other major chains go down as people start to kind of key in on this narrative. Like
Mm.
inflation on Sol is what, like 7%?
Yeah.
That's a
Uh,
lot. Like if it's 7% and your asset's $100 billion, you need 7 billion a year just to absorb the inflation.
so maybe I don't know if you guys have any other. I sort of organize mine a little bit by I had kind of the major ecosystems and then a couple of just uh, non-ecosystem related projected. But I had some Solana related predictions to get into. Um, here, I'll just sort of rattle off the list of mine and how I'm thinking about it. But I think actually I also think that Solana will either introduce a SIMD that gains a significant amount of traction, or will actually change their inflation policy and lower it in 2025. I would guess probably more a SIMD that has traction. Just remembering how long it took to get something like 1559 passed for Ethereum, like there's a lot of pilling that needs to happen there. So I think it's going to be take a little while to do. I think Solana is going to have a little bit of trouble sustaining the positive momentum that it had from a sentiment perspective in 2024. Like Solana has executed and done phenomenally. They also had the benefit from both a sentiment and a price perspective of going off an extremely low floor. And now I think they're starting to deal with some of like the quote like big boy problems that ETH has been dealing with for a little while. And so that happens around like MEV in general. Like there's I'm sure you guys have probably heard there's this, I don't want to name any names, but there's this actor who's basically gained access to somehow what it looks like private order flow or private transactions on Solana,
Hey,
sandwiching users.
whoa!
And
We
yeah,
all
I
think
think
it didn't happen.
I think there's some element here. This is like my commentary on this, and I don't mean to offend anyone, but I think one of the criticism, Ethereum takes certain issues much more seriously than Solana does around like decentralization and like some of these thornier problems. And I think there are pros and cons to it. I do think that sometimes it's easy for Ethereum people to get lost in the sauce a little bit of it, but also they're dealing with really thorny problems that matter a lot. And so I think the Solana solution to some of these problems have been like, what if these things don't matter and we're not going to actually create solutions to some of these things? And I think that has unearthed some over engineering in the Ethereum ecosystem, but it also is going to reveal some cracks. And I think that probably a lot of the MEV solutions that Ethereum has pioneered via Flashbots, I would guess that you guys probably know better than me. Like Jito is one of my favorite teams in crypto, but like I guess a lot of their MEV related solutions maybe gravitate towards more what it looks like on Ethereum today. Um, and so I think, and the other thing too that I think is just going to be a little bit challenging is I think a lot of, especially like the good trends in like REV that Solana the network generates is linked to the meme coin market.
Right.
I know that a million people are typing out calling me a mid curver right now. It's just very difficult to sustain that market, I think, over a long period of time. And so I think positive momentum in some of these metrics is going to be a little bit challenged for Solana going into 2025. That said, one of my predictions for 2024 was that this is largely the Solana dominant cycle. I would still guess like positive momentum in terms of like Sol ETH, Sol BTC pairs, even just for no other reason than it's a smaller kind of higher momentum asset. But that's why I think it's still going to be a good year for Solana, but I think kind of cracks emerge a little bit and the exact trajectory of that momentum is going to be a little bit more difficult to maintain going into this year.
I would say I remember when Dan Robinson basically discovered MEV on Ethereum. It was like that Dark Forest blog post series, and he like rescued someone's funds, and it was just like the whole industry being like, "Wait, what the fuck is going on in this chain? Like, this is totally insane. Like, how much are users losing? And like, is Flashbots like the arsonist or the firefighter? Like, can we figure out something else?" And that was like basically peak of 2021 when that happened, and it kind of set off this era of like growing pains for ETH. And I think it's basically taken 3 years for it to emerge from that. I don't think the same thing is going to happen with Solana. I think it will experience growing pains, but like, there's no bear market imminent that it'll have to sort through all these things during. And I think, the unlocks with Sol, like it just depends on how bullish the market is. One thing I've been consistently reminded of is just like it's more about demand than it is about supply.
Yeah.
It's a fixable, problem in many contexts. But I think where things kind of re-rate is just like if you're bullish on Sol and you're like, it's going to go through some unlocks and it has all these potential problems, and Jito's generating the same amount of fees and is probably central to solving these actual problems. Like whatever fix ends up happening on Sol probably goes through Jito. I think people are going to kind of be more biased to the application layer. I think the other thing with Sol is just like, are meme coins durable? I personally think they are, but there's so many different formats now that like, the performance of like Dog with Hat, which I would say is like a factory farmed, meme coin unicorn versus like fart coin or like versus like ephemeral coins that are
Fartcoin's
just
pretty funny though. It
Fartcoin's
is
hilarious.
TradFi discovering Fartcoin is an amazing Christmas
so many
gift
people who
for
are pissed
everyone.
Put it in for shitcoin.
Why aren't they buying my deep value, utility stock? It's like, we're busy. We're very busy pumping fart coin. But I think there's just a lot of dispersion in memes, and
Yeah.
I think the ephemeral stuff probably stays on Sol, where it's like, Peanut the squirrel dies, 5 minutes later that's launched. That probably stays unsold.
I would say I don't necessarily disagree, but I would say we're starting to see the shift, and I think that this shift continues to things that have mimetic value that also have some form of utility attached to it as well will outperform just the pure memes. And I think you're starting to see this with things like AI 16 or AI 16Z, where it's like, okay, you can actually build something and it's got real value, and they're training the model, like the frameworks are working, like that stuff has mimetic value, obviously, and that's where it gets its breakthrough moment. But what keeps it sustaining and what sustains it even higher is having some form of utility attached to it. And so I think you're going to see, like, I agree, like the pure memes, those are going to continue to exist on Pump, but you're starting to see some of the fragmentation into things like Clanker and base meme coins. I think that continues, especially with, and I know that we're all patiently waiting with bated breath for the Berachain launch at some point in Q5. But the the idea is that you're going to see further fragmentation, but the things that have sustainable value actually are the ones that can break through with the memes and then also sustain with the utility. And I think Solana will have to, if Pump has been what has driven the growth, or 95% of the growth so far, Solana will, one of my predictions is that Solana will have to change the narrative of where the growth is coming from. It'll have to have a new category that is sustaining the Solana growth, but it will find that. And whether that's, being competitive with Hyperliquid, with a Clob, whether it's, having some sort of new kind of AI agents and virtuals competitor, I don't know exactly what it will be, but I think that they will have to find something new, but they will find something new.
And it has to be institutional. I think the risk to Solana from a narrative perspective, it's the 4chan chain. And like, when I go on pump.fun, it's like everything's shaking. Like the comments are like absolutely wild from the people that are in there. And it's like, okay, this is like very fun. And I think the Chris Dixon thing where it's like, big things that, start out looking like toys. You're definitely in that phase, but it's like, how do you get that next leg up? And I think a lot of it's about institutional adoption and specifically the growth of stablecoins on Sol. Like if I were the Sol Foundation, I would just be trying to get as many stable coins and payments on that chain as possible. And kind of being like, like Pump Fund's great, but like maybe not in the forefront. Maybe just get in the back of the picture.
Here's an interesting thought that I just had. You know how Vitalik was never, at least initially, like the biggest supporter of DeFi, and I think this has been talked about more recently.
Fucking Jesus Christ, he was not, and thank God he finally is.
Well, DeFi is what built Ethereum, and the Nasdaq of blockchains was the narrative that was being pushed for Solana, but meme coins are what made Solana. It's kind of like every founding team has this ideal of where they think their blockchain is going to go and what they're going to accomplish, only to be superseded by what Elon Musk's law of the internet, which is the funniest thing, will be what takes over, and that's exactly what has happened.
Yeah, I've got one other prediction as well is just Fire Dancer, and when they're so my prediction would be I actually think it ships a little bit later than people think these things always do. I would say Q3 or Q4. I don't think it's going to be 1 million transactions per second, but it'll be, I don't know, maybe north of 100K or something like that. Even TPS is a flawed metric. It's like swaps versus sends, whatever, like sort of a net blended average, if you will. The other thing though is that maybe this is more of an observation than a prediction, but I think that, and you already see this a little bit from like the Alliance style guys who run that very early cohort of founders, their accelerator program. But I think Base versus Solana feel very competitive. Base is running away a little bit with the L2 market, and to both of your guys' points, sometimes when a chain wins a category, it doesn't really migrate to different chains. Like Ethereum kind of won DeFi, and despite how successful Solana has been in the last year and a half, the DeFi scene on Solana is much smaller than Ethereum, and it never really fully migrated. And so I think the same thing is going to happen with meme coins. I don't see them ever moving. I think frankly Solana has just won that. But one of the other predictions that I've had for this coming year, and I'm not smart enough to know exactly how this plays out, but Vance, to your point about AI still being huge in regular markets, I think that AI is going to be still like a really dominant narrative in crypto for 2025. And it feels like there's a little bit of a budding war here, even in between like virtuals on Base versus like the new AI meme coin market, and is that going to be on Solana or Base? And I think there's going to be a big battle in terms of which chain ultimately wins that market, like which is the AI meme coin infrastructure, whatever it is, chain.
My bet is that that market ends up playing out extremely differently than people think. Where
Mm.
people are like, we were doing what a year ago, like launching like news themed meme coins. Like I think the biggest intersection of meme coins is going to be AI and games. And AI Arena, they're kind of like pioneering a lot of this at the moment in terms of like, how do you add utility into meme coins? How do you make them a bit more durable without taking them in this like totally like white paper direction? And I think that's kind of like what I see with a lot of the AI agent stuff, where it's like, well, it started as a meme coin, but now it's like a new paradigm. And like, here's this like, 40-page research paper I wrote on meme coins and my philosophy behind them. It's like, if you have to write a white paper on a meme coin, it's not a meme coin. And so you need something that gives utility to it without kind of like setting a long-term roadmap. And I think there's a chance that like a gaming chain, maybe it's IMX, maybe it's Beam, maybe it's Ronin, kind of takes this and runs with it and just says like, we have most of the users, most of the retail, the most direction connected to retail bidding, and like therefore we get to say how meme coins take shape. And I also think like the other way this plays out, if Solana hadn't gone from $10 to $250, the wealth effect probably wouldn't have been great enough to create meme coins. Like period, end of story. And I think the same you can say for ETH and all the DeFi assets and all the memes that exist there. But like the new L1s with a real wealth effect are going to be the ones that are teed up to create new meme coins. And I think like Bearchain, Monad, I think those are the two that are like basically like appointment viewing in terms of like people are not going to just like wait to see how it plays out. They're going to be there day one involved in the ecosystems.
Yep.
Maybe there's one or two others like Abstract or something like that.
All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty follows 8 independent audits of v4 to date and aims to make it the most rigorously reviewed codebase ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap v2 and v3 without a single hack. So Uniswap v4 is dedicated to bringing that same level of security and transparency to the v4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there is a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today.
So I had also on a list of predictions here that the L1 trade is still, because people ask every year, is the L1 trade finally dead? And I just still don't think that it is. I don't think that it is. My predictions were a little bit more. I didn't include Monad or Bearchain because they just hadn't launched yet. But what looks like the fastest horses to me right now that are live are Sui and Hyperliquid. Hyperliquid's one of those. Well, I just missed it, so I'm in a constant state of cope. I've missed it this cycle. And that's like I'm okay with that.
Just don't. Just let it be.
Yeah, just letting it be. But I do think it just feels like one of those. Honestly, the analog that I have is kind of BNB as a coin, where like that thing just ran in people's faces, and everyone's like, "Why is this happening?" But it just kept running. And I sort of feel like that's probably the analogy there. And Sui, I have less of a strong opinion on. I've just noticed like during pullbacks, if you like look at which coins bounce the hardest off, like Sui's consistently at the head of the pack there. It just feels like it's got momentum. So
Depends on if it's durable or not.
Right.
Yeah.
Like
Absolutely.
I think a week ago people were like Phantom is the new Sui.
Yeah.
Like these things are moving so quickly that like, day to day, it totally changes. And I think like the new L1s launching are kind of like clean slate, more durable, more professional, frankly, like probably better candidates for mass adoption. Hyperliquid, I think my question is like, has it ran too hard, too fast? Like, I think there's a point where you're like, oh, I missed it. I'm going to buy some. And then there's a point where it's like, oh, I missed it. I just missed it. I'm going to go find something else.
I know. It hasn't really given you any dips either.
I would say it's like people are now cued in that it's like this thing, whatever launches on Binance at 2 or 3 billion, like you're buying it. There is no, and I think you saw that last cycle where like basically like IPO flipping became a thing, coin flipping, whatever you want to call it, I think that comes back.
Okay, so I had one more. This is like more of a. I'm almost trying to think out loud here, less than a prediction, but I think that actually maybe one way I guess you could phrase this is, multi-coin has always been very much like L1s or asset ledgers type thing, and I think in general I'm kind of coming around a little bit to that, and I'm noticing a link in between how important dexes are to an like the exchange function of an L1 to an actual L1 itself. And honestly, there are some things that you can kind of squint at and see, I think, a similar driving design philosophy here, which is Unichain, Atlas, Hyperliquid. And it's kind of like an execution environment that has a DEX at the center. And you could call it like a purpose-built chain for DeFi, whatever it is. But I think that as a sort of design architecture is going to be powerful. I think the risk there is like people are very bullish on new like Hyperliquid. Actually, the big risk to Hyperliquid is it's not really an L1; it's just a DEX, and like the L1 stuff is just dressing, and no major apps are going to launch there because why would you? You're always going to be second fiddle to the first party DEX on the chain. So, but I don't know. Call it whatever. It's like purpose-built chains for DeFi. I just think that construction of trying to get a bunch of DeFi and transactions happening on one layer is going to end up being like sort of winning.
I think the reason why you would assume that happens is because an asset ledger, I mean, it suggests that there's assets on the blockchain. And if you can have the DeFi applications bring assets in, then you've got liquidity there, you've got users there, the rest kind of takes over. But I mean, this is one of the reasons why I think, proof of liquidity and alignment is really, like the novel aspects of Berachain. You're exactly right, and all the application developers, all the third-party developers that are building on top of Berachain understand this. In that, if you enshrine all the things that everybody knows are going to exist in the blockchain ecosystem, you assume that there's going to be people that bring over their assets and then they stay there, and then you're going to want to be the application that's able to be the whatever it is, whatever application in that ecosystem, because you got users and liquidity. So I generally think that like that playbook could work, but that's the bet that you're making on Hyperledger right now. You're making the bet that this is the best trading experience on chain, and other applications will do well just because of proximity to that.
And the wealth effect of the hype token.
Right.
Yeah. Like, spot coins are popping off on Hyperliquid. It's like, well, the coin is at like 30 billion FDV, and 30% of it is in the hands of retail. Like, they're going to bid things with it. I think with Berachain too, it's like even like the negative stuff of alignment, like negative alignment, I would say is like, Polygon, the bridge deposits, like going off and using those for who knows what. I think Berachain is going to kind of think about or put forward proposals for like how to reason about just using, stable assets, crypto native assets, whatever you want to call them, on Berachain to kind of make the POL flywheel really work. And on one side, you'll see like Polygon, not running away, but just like using people's deposits for things that they probably didn't consent to. And on the other side, you probably have like a broader consent mandate where POL is used for a lot of things that users may not even really kind of realize. And so I think it's going to be a stark contrast between those two. But I don't know if the era of alignment anons is over. Like, it feels like we put a nail in the coffin of like Lido shouldn't have 33% of stake. It's like, doesn't matter at all. And then it's like, the gas limit and the L2 roadmap alignment, like that's kind of pushed aside. But I think Berachain still has kind of more to say on that front. And it'll be interesting to see them launch whenever that is.
One thing that I got wrong going into 2024 was a lot of the prediction. Because if you remember back to the beginning of this year, people were really, Lido was like a huge hot topic, and restaking. And I really overestimated the amount of ETH that was going to go into restaking, and also the percentage of liquid staking that was going to have, like both the stake rate and the percentage of liquid staking actually slowed down a lot, which is why I'm not like Lido alarmist, because I actually think that there's more holders of ETH out there that wouldn't stake to Lido or a liquid staking solution than you would think. And so I've never been as worried about the stake rate going to something like 80%. But I just got that wrong going into this year. Well, here, all right. So here, I have a couple of DeFi specific predictions here, and I would love to get your guys' take. We haven't really talked about this. We talked about America within the context of Trump, but I think this is going to be a huge year for people moving back to the United States.
Already has been.
Already
Yeah.
has.
Thank
You
God.
can
too.
already see it. Thank
super,
God.
super
Yeah.
depressing seeing people move to like fucking Lisbon because you don't want to. You can't live in the U.S. I get it, but it's just like America was going down such a dark path for a while there. I'm so glad it's over.
Mhm. Me too. I don't know how to put quantitative statistics around this, but somewhere in the neighborhood of like 20% of either founders will move back or offices will open in New York or San Francisco or something like that. Like, I just think that there's this, kind of American Renaissance meme going out there, but I really believe that it's real and we're just at the very beginning of it. And I think DeFi ends up being a beneficiary in a number of ways. I've got one positive about DeFi and one maybe a slight concern, which is I think that this is going to be the year that we turn fee switches on, finally. Like, I know people have been predicting that forever, but it's already happened a little bit. Like, there's a proposal for Athena right now to turn the fee switch on, and I just think that founders are going to say this is go time, basically, and I think you're going to see more fee switches turned on than you ever have before. Did you have something to say there, Vance?
I think the only stuff with DeFi that's like more quantitative is calling for 500 billion of stablecoins by end of year 25 and 10 billion of aggregate DeFi fees. One of our LPs asked us, like, how do you judge the success of DeFi? I think it just like it is aggregate fees. There is no other metric that really matters. Maybe stablecoins as well, but I would say we're probably at 3 or 4 billion of fees in DeFi today, and so
way less than that, I think.
Way less. I mean, you add up Maker, Lido, Uni. I'm just talking about revenue here, not earnings. Maybe you have 750. You add Athena, maybe it's 1.5. Yeah, you're probably right. 2 billion of fees. That's a 5x in fees and a probably 2.5x in stablecoins. And it just feels like that is going to be, if there's $500 billion of stablecoins on chain, people can't be like there's no use case. It's just not possible.
I mean, if there's 10 billion of whatever you want to call revenue, income, I mean, we need better terminology, but if there's 10 billion of that, yeah, you can't. It's undeniable that this is a massive industry. Like that is more revenue than the applications of AI. Period. End of story.
And orthogonal one on just like maybe just like going back to culture and politics just for a minute is like I saw this take by Logic or Brain Genius. I don't know if you follow this guy on Twitter. He was like an ex-GC at some crypto fund, but he's in and on. And his whole framing is like Trump can't pump the stock market to like 15,000 S&P, but he could probably get Bitcoin to like 300, 400,000. And like, Trump views Bitcoin as like this new version of the stock market that's uniquely his and identified with him. And I think that's like totally, totally right. Where, you haven't seen him tweet about the stock market really. He probably can't because there's so many people in his administration that are conflicted out. But like crypto is kind of this thing that nobody owns / everybody owns / is like, I think in his mind is like the independent voter stock market. And so I think it's a really interesting way to frame it is like crypto is Trump's stock market.
Well, it's also the younger demographic stock market.
Yes.
And
more Hispanic, more African American, it's a crucial voting block for him coming into the midterms.
Right.
Yeah, I think that the political influence of crypto in the United States has been permanently established. That was still probably I couldn't even as someone who's very bullish on this industry, that was one of the more bullish developments I've ever seen play out, kind of above even wildest dreams expectations. And got to give Coinbase a little bit of a shout out here as well.
It was 100 across the board. We just absolutely crushed it.
Yeah, I completely agree. And there were a lot of Fairshake was massively influential there. I think the Stand with Crypto initiative from Coinbase has been really helpful, not only for the dollars that they contributed, but for the visibility that they contributed as well was massively important. There was that very critical race between Bernie Moreno and Sherrod Brown, and I was seeing something on my timeline every single day about it. And yeah, so
crazy. I mean, Sherrod Brown was the head of the Senate Banking Committee. Gone. Caroline Crenshaw, gone. Like all these people, just
So yeah, I mean, just because we're on the subject, I think this is a pretty obvious one. But prediction for 2025 is that we do get a market structure bill passed. It probably won't happen until the second half of next year. just immigration, tax reform, some of the hotter topics that will require a little bit more political momentum to get through are going to be first and foremost. But yeah, we're going to have something probably not exactly what you saw with the FIT21 bill, but I also think, and this is like my broad prediction for 2025, is that 2025 is the year that we break the 4-year cycle and it actually extends longer. And one of the catalysts, not the only one, but one of the catalysts for doing that is basically like 10 to 11 months from now, like October, November of 2025 is when we start to see, when we see what the market structure bill is. And that sets off basically like a whole new wave of adoption because you've got, entrepreneurship with a playbook as to how to operate in the US. You've got a definition of what is sufficiently decentralized to be a digital asset commodity, versus a security. You've got ways of raising capital from retail participants in the form of tokens. I think all of that basically just like opens up the floodgates of activity and attention in a way that we haven't thought of or seen before. And that's probably not going to be until the second half of next year, but also probably after a very bullish first half of next year from a price action perspective.
All right, well, actually, I'll just build on that actually, because one of my predictions as well was that we see the return of the ICO meta. And I think it's not going to be the same way that it was in 2017 as first of all, as dominant as it was in terms of ways to raise capital. And it's not going to be nearly as lawless as it was. I think it'll look more just like, a crowd sale process, which is roughly legal here in the US already under certain amounts. And I think that's going to return. And my solid prediction around that would be like you get 5 relatively blue chip protocols that raise money in that way. So I think that's going to re-enter basically this idea of crowd, if you want to call it crowd sales instead of ICOs, maybe to replace airdrops. I would say that is what's going to happen.
Careful what you wish for. ICO season back, huh?
I mean, yeah, it's going to happen. But at the same time, what's also going to coincide with that is like disclosure requirements, where you're going to literally be able to see whenever a founder sells some of their tokens, they're going to have to file something with the SEC. Like that's just a crazy fact.
Yeah. How those two happen at the same time will be very interesting to see.
Yep.
Okay, so one more prediction for you guys, and I would be curious to get your take on this. Maybe a little bit more of a pessimistic take would be, at one point I was pretty convinced that when Trump won, that the IPO market would really open up in a big way for crypto startups especially. I'm a little bit less bullish on that now, and one of the things too that I've been sort of waiting for this cycle is when are you going to get those like mega cap raises of $150 million or $200 million? I still think the latter part, like the growth stage capital, is going to be, I think it'll be back-ish, but I don't think it's going to be to the levels of 2021 because like the valuations that a lot of these companies got are so nuts. They still haven't been able to grow into them. And I think a lot of investors now are going to start to see through the cyclicality of crypto cycles, and they're not going to give you credit anymore for these crazy ramps in like late stage, late cycle revenue. They're going to see through that and be more discerning in terms of how they're discounting that. And I still think that those companies that raised at nuts valuations are, and so basically I think that the IPO market and like late stage growth equity is going to be more challenged as a space because there's still valuation overhang to work through. That'd be my prediction.
And I think that is, frankly, what happened in 2021 is more of a byproduct of that liquidity onslaught that I was talking about earlier.
Yeah.
It was just like we have billions of dollars to deploy. The name of the game is deploy it as fast as possible and collect 2% management fees on money deployed. So I don't even care what the valuation is. Just like let me give you $500 million. That was the name of the game in 2021. It's obviously not the same environment from a liquidity perspective. It's much more healthy. It's much more realistic. Investors are a lot smarter to take one day of revenue, extrapolate for a year to get ARR effect. Like that just doesn't happen anymore. But I do think that we are going, one of my other kind of like broader predictions is I think that there still remains to be seen whether or not traditional venture capital, and what I mean by that is funds below a $1 billion fund size, traditional venture capital is the right funding construct for AI, period. And what I mean by this is I think that to play at the big boy table, I mean, Larry Ellison said you need $100 billion to have a large language model that's competitive. Based on the infrastructure, the training, the energy, et cetera, that's how much it costs. That's just not something that should be funded by venture capital. That should be private credit. It should be debt. It should be other mechanisms of funding. And there are only a few companies that are going to be able to do that. And so I think what we're also going to see is a broad rotation of all of these traditional venture capitalists back into the market, and that will actually have an effect of bidding up some of these stupid ideas. We're starting to see this. Like I've gotten calls from friends at other firms who are just like, hey, what do you think of this deal? Should I do this? Like, I don't know. I don't really know anything about crypto. They're building a stable coin. Oh, they're building an infrastructure for payments using stable coin. Like all of these businesses are starting to come back with the broad opening of the lens of crypto is back in vogue. But I think that the dumb money is also going to follow. I don't think it's going to be in the Tiger Global, level of crazy 2021. But I do think that there's going to be a lot of bad deals made, in particular by tourist traditional venture capitalists who don't know what they're talking about with crypto.
Good take.
I completely agree with that. Yeah, good take. Agreed.
Also, I would just say, like, on your growth, growth isn't coming back. Growth equity or late stage rounds. Mm-hmm. Avalanche just raised $250 million. So
did they really? All right, maybe I'm wrong about that. Yeah,
it did, but the construct of that is like it's a
token sale. Blah blah blah.
Right.
But like, look, all of our peers are raising right now, as far as we can tell, and it seems like they will raise. It's going to take a lot longer than probably last time, but everyone's going to be cashed up by, mid-year is my guess. Maybe it takes a little bit longer than that, but like, all the big VCs raised kind of like when 2020 in the last cycle, and then kind of they had like 2022 funds. Like 2022 was a big year for just like there's a lot of crypto fund vintages there. So I would say the game really only gets started once they're cashed up,
and this is furthering of the point where I think we break the 4-year cycle, which 4-year cycle would mean that we're peaking basically November of next year. I think that we are peaking in terms of price action November of next year, but I think that that's actually just the start from a structural perspective, because you've got reloaded funds who are back in market making venture deals. It's not going to be, the other aspect of Vance's point is basically every fund that raised X amount last cycle is going to come back and raise about 0.5x this cycle. And so it's not going to be the same, massive funds that are going out and being able to raise. The best funds will be able to raise their fund size that they want, but the vast majority of the funds are smaller funds this go around. So there's less capital broadly, but I do think that the market structure bill and the reload of fresh VC capital is going to make for the start of a structural bullish market basically this time next year.
I completely agree with that. I think there's a lag effect in terms of when prices and business activity peak, and we saw that in 2021 versus like Blockworks. We had our best year ever 2022 when everything was nuking, and so there is definitely a lag effect, I think, that ends up happening. And one thing just on the note of like IPOs, and there's kind of being a tale of two cities of like more protocols that have tokens versus more traditional equity-based companies. In the same way that like Solana just has this market for where you launch meme coins, I do think in general, the dynamics of launching tokens is so attractive that I think you're going to start to see more of a distinction in between like, is the path to like go public and, be in US capital markets, or do you just launch a token and that's your equivalent of a liquidity event? And over time, I think it just moves more towards you just launch a token and it's just a separate capital market. Yeah.
And this is why the market structure bill is going to be such a seminal moment. It provides a path of entrepreneurs and entrepreneurship that doesn't require you going through the NASDAQ IPO.
Yeah. So that's like we're not going to prove that out on a 1-year time horizon, but that's a mental model, I think.
I think we will have the structure of it this time next year.
Yeah. Okay. One more. One I'd be curious to get your guys' take on this. I feel like I've voiced this before, but I do think that TikTok ends up becoming more important as a conduit for new money and new retail, young people, whatever you want to call it, that it has been historically. It
Does it get banned?
No, I'm going to
I
say
don't
no
know.
with Trump and Jeff Yassen in tow.
Interesting.
I would probably be on the. I actually just don't know. I'd be making something up, so I'm not really sure.
Going to the Supreme Court in January.
Yeah. Okay, I've got one more for you guys, and this is a little bit more on the pessimistic side, so you guys walk me back from this take. But I think on DeFi, one thing that I mean, you guys have probably followed this Polygon bridge drama.
Yep.
But I find it to be a pretty interesting discussion. So Sam Kazemian actually came on an episode of Bell Curve like a year and a half ago, and just very clearly illustrated the connection to me in between like a lot of these DeFi protocols that you think of as being very different under the hood from a balance sheet perspective look very similar, like bridges, LSTs, stable coins, lending, like borrow lend markets. It's all pretty similar, right? It's like there's the liabilities are like user assets, and then the assets of the protocol are something that you put into. You can either hold it in full reserve, which is what bridges do today, and they just give you like a synthetic obligation of the bridge, to operate on Base or Optimism or Polygon or whatever. And
These
then
users money.
Yeah.
huh?
I said these IOUs are as good as money.
These IOUs are as good as money, right? And I can link Steakhouse Financial actually did a really great, if anyone wants to nerd out about this, like they did a really great overview of the transformation that's actually happening here. But in general, there's a little bit of a push, and Blast was the first one that kind of got this, which is, hey, we've got a bunch of assets that are just sitting in this lock contract. Like we should just have these earn yield. And as soon as you do that, the bridge looks a little bit more like, it's a net interest margin business. It's a banking. It's a little bit more like a banking type business. And then the other trend too is, you've got these kind of vertically integrated solutions a little bit, like Fluid is a good example of this, where you're routing liquidity for the DEX through borrow lend protocols. And so kind of when you squint at this, it looks a little bit more like banking. You're chasing capital efficiency, so you're routing liquidity through multiple different products. Like, just looks a little bit riskier to me. And I don't know. I don't have a solid prediction around this. I don't think anyone's going to blow up necessarily or anything like that. But I would just be careful to not over extrapolate why DeFi performed so well last cycle, because it was just way over collateralized. If you start rehypothecating assets and you try to maximize capital efficiency, it's riskier than it used to be. So that would just be like a trend that I see happening. I'd be curious to get your guys' take on that.
I agree with a lot of that. I do think, look, what happened after the subprime mortgage crisis is that everybody started to look for other subprime risk. And I think what we will probably fall into as an industry is like rehypothecation bad. Like, no, can't do that. High float or low FTV or high FTV, low float tokens bad because you can use that for asset. Like all of that stuff, I think we overfit to previous traumas that probably don't necessarily materialize again in real size. And so I think we're just going to be like, as an industry, it's going to be extremely sensitive to anything that looks and feels and could potentially be something similar to what we saw in 2022. And so I broadly think it's going to be overblown in terms of risk. I do think that doing malicious or nefarious things is bad. And it just being open and transparent with it. Like Blast is open and transparent with the fact that, hey, you send us your ETH, we stake it, the protocol earns yield. Like that's how it works. And I think you just have to be open and transparent with it. And that's how you solve it.
It is the first unauthorized use of retail capital this cycle. So it's definitely a milestone, but if it's disclosed in the right way, I honestly don't mind it. As long as we're not lending it to market makers under collateralized. I think that's the bridge that is too far.
Or lying on financial statements.
Lying on financial statements. And frankly, we haven't seen any of that yet. And it hasn't even really been close. And, people used to lend you money based on your Twitter handle. It's it doesn't happen anymore.
Or Kyle from Three Arrows signs a letter on behalf of Three Arrows saying that they are solvent.
Bro, you're not solvent. it's definitely a signpost for where the bull market is, and just people trying to pull out the stops to make their token frankly have fundamentals. And what's really crazy is like I think if you ask most people, they would say Polygon is in like a tough position. There's a lot of chains that are fast and cheap. There's a lot of chains with a lot of stuff going on in them. But in 2020, in 2021, Polygon was like, it was just going to eat all of ETH's market share. It was going to be the only L2. It's just crazy how things change.
Yeah, and I think I agree with what you guys are saying as well. And I generally think that this is inevitable. It's just a better business model, what Polygon is describing here. Because you could do things like, if you have basically a net interest margin business, you don't have to charge people fees, right, on bridging and things like that. So I think I view it as just being inevitable. I just think we should go in with eyes wide open and be smart about it. Like maybe here, instead of co-opting users that already bridge their assets, just make it for new users and they get to opt in or something like that. I don't know, whatever it is. I think if it's done correctly and risk managed properly, I view it as inevitable. So we might as well just make sure we get it right. Would be my
open and transparent. That's all you need.
Yeah, totally. All right, fellas, those are the predictions that I had. Any closing ones? Any ones that we missed, or any? I guess just thoughts going into the new year that we didn't get to.
I think people are not bullish enough. Like I am perplexed. I'm befuddled why people are like, yeah, it tops out at 150. Like, bro, that's like 30% away from where we were 2 days ago.
I'm similar mindset. I think people are either not bullish enough or like way too bullish on the wrong assets. That's kind of my framing. It's like, people are like, Fartcoin is going to flip Dogecoin this cycle. It's like, what logic underpins that other than Fartcoin being funny? I'll probably eat these words too at some point.
No, dude, I know it's so true that you know what? A lot of there's a very similar logic pattern that emerges here, which is it's basically imagine if this flipped that, what would happen? And it's just you can't really refute that, right? Like, yeah, if that was a 20x from here, that would be sick. But there's a little bit of a gravitation towards that style of logic and arguments and thinking and what you see getting engagements on Twitter. So I don't know, if you're listening to this and you haven't been through cycles in the past, just like take all of those posts with a massive grain of salt, I would say, and don't totally lose yourself either in the sauce. So
I would say my broader, like probably more realistic approach to what 2025 brings is that this is the year that we truly do get legitimized as an industry. And it's what you had with the liquidity slosh of 2021 was everybody walked away from 2020 and they were just like, oh, okay, well, that was fake because everything was fake. Like, it doesn't count. And there weren't real users. There wasn't really adoption. There wasn't real consumer experience. I think all of those get solved this year. But then also the legitimization of having a new legislative framework for this industry. And I think 2021, we walk out of the year, 2025, we walk out of the year being like, okay, we are very clearly one of the top 2 tech industries within the US, and we are protected as such.
That's a great take.
I love that take. I completely agree.
Let's end on that.
Let's end on that. All right, fellas, this was a good one. Another fun year on the books with you guys, and yeah, look forward to a very bullish 2025. It's gonna be a blast.
Give me fun.
Later.